Hi, this is Michael from BackToTheFutureTrading.com. One of the things we can look at is the historical behavior pattern movement of the institutional traders in the Forex market, as well as the futures and equities. And what I can do here is I can squash the shorter term movements, and we can only look at these larger swings, and we can only have markers if we're more interested in those trend movements over time and want to catch those smaller swings back and forth. So I can look and tell the computer, hey, I only want to see the larger trend swings, and that's what these two purple filter lines are. I only want to look at the behavior patterns that have enough power to get out of this range. Everything else is going to be considered a behavior pattern that's developing or shrinking and on its way out. So only the larger ones I want to see. And when I do that for the Euro US dollar, these are all Eastern times here on the bottom. What I'm going to try to do is shrink this up so you can see where we are right now. And I'm going to draw vertical lines at each one of these markers. And I want you to see statistically how many of these markers actually produce moves in the directions we were anticipating. So I'll draw the ones that actually produced movements in the direction that we were looking to see. Did the institutions in fact follow these movements? Now, of all the zones that we have plotted here, let's put numbers next to all the ones that worked. 1, 2, 3, 4, 5, 6, 7, 8, and now 9. So 9 working, 1. Where's the other one? There's one here that didn't work. So basically 9 out of the 10 producing moves in the direction that we were anticipating since the London Open this morning. Now, why is that important? It's important to you guys for two reasons. Because not only did we know in advance when these moves would occur, we have another piece of information, which is we know how long the moves are anticipated to last. One of the things that our clients tell us consistently is that I now have the confidence to stay in a working trade and let it run. So for example, let's break these last two trades down. At 10:16 this morning, we knew that, anticipated that we had what? A green trend zone coming. We anticipated buyers, institutional buyers coming into the market and raising prices. Now, the other side of that is we knew how long we had for that trade to work. So in this case, from 10:16 Eastern to 10:56 Eastern, or 40 minutes. How many traders start looking right around here? They're in the green a little bit, and it starts to pull back, and they say, "That's it. I'm going to let my profits get out of here. Let's book it and run." But over here, you saw that if you held it the full duration, it tripled the profit that you had open in the trade. So you're rewarded, but there was an anticipation that until this red marker appears, I should hold on or at least trail this and let it work. Similarly to the red side, most traders here, they get in the trade, they say, I don't know, it's going against me right away. You don't hold the trade if you're 3/4 of the way into the red zone and it's flying up against you, if it's working the opposite. But if it starts moving in your favor, you have every anticipation of how much time I have to the right-hand side of this dot to let the trade work. So again, having the flux in advance alerts you to the zones before they occur. You see the setups lining up with what the institutions historically do following their behavior cycles. And now you have a third component, which is how long does this trade need to work to maximize my profits? Those three components together can produce the results that you guys see here on the screen. 9 out of the 10 zones so far since the London Open.